Guys, I have amazing news. The market is back. Prices are going up 10% this year. We've hit the bottom. Okay. This is what I was told this week. So it must be true. We are here with our monthly annual stats episodes. We're going to be breaking down the March stats. Definitely interesting. We've seen transaction volume trickle up. I know Cole and myself are both feeling busier. Let's talk about what that actually means on this episode. As always, this sarcasm is not intended as advice, but this podcast is not intended to cause or induce breach of any existing agency agreement, and it shouldn't be misconstrued as financial advice, representation advice, anything like that. Please make sure that you have an agency agreement or you're working with someone officially before just listening to our podcast and doing anything. I'm switching up the words a little bit, Cole. Look at us just changing things today. Magical. Anyway, let's get into the Cole's Notes update for this stats episode.
Yeah. All right, guys. Before we get into stats today, we'll do a quick market economic update. So it's going to be some of the usual suspects here, but let's talk about something a little bit different here. So GST rebate is official now. It's been official for a couple weeks in the fact that you can actually now apply for the rebate. So it's been official actually longer than that. It's been about a year now, but you can actually apply for it. So anybody that bought a home that was newly built, up to $1 million, you get a full rebate. From $1 million up to 1.5, you get a partial rebate on the GST. So on $1 million newly built property for a first-time home buyer, you can get up to $50,000 back because GST is 5%. That's quite significant. On another note, we're going to branch out a little bit across Canada here. Ontario has eliminated actually HST on new builds for first-time home buyers. HST is significantly more than GST. I believe it's 13% in Ontario. So you can imagine that's $130,000 on $1 million. Awesome for Ontario. I know why they're doing it. Condos in Ontario are obviously, specifically in Toronto, are having a hard time selling. So they're trying to help incentivize people to buy some of that new product. The caveat here, though, is it's only good for 12 months. So if you enter into a contract now and don't close for 12 months, you may not get this rebate. So it sounds like this is more tailored at products that are sitting on the market, considered new, but are already completed. Something to be aware of if you happen to be listening in Ontario or looking to buy in Ontario. And last but not least on this, BC is actually looking at doing some additional savings as well on new builds. What that actually means is anyone's guess at this point, but there is some rumblings that we might see something at a provincial level to help clear out some of the new build inventory and help incentivize developers to keep building properties, because ultimately, Austin, there's not a lot of incentives right now. So, and we have obviously talked about the budget as well, which doesn't make it any more cost effective for people to build. So that's, yeah. So we'll see what BC decides to do here, but that may just be a rumor at this point. So let's talk a little bit about the economy as a whole. Gas prices continue to rise.
Do we have to?
Do we have to? Yeah, it's not good news, guys. Gas prices continue to rise. That's probably not a surprise to you unless you never drive, happen to own only an electric car. Even still, I think you'd obviously see the gas prices. So pretty hard to avoid that. But I think the big thing here, Austin, is it doesn't just hurt us at the pump when we're filling up our cars. It hurts us when it comes to other things like groceries, because food has to be transported and transportation costs are going up. And that's not good news. And then how does this actually all relate to mortgages and the real estate sector? Bond yields have gone up as a result of this. And when bond yields go up, so do mortgage rates. We've seen mortgage rates over the past few weeks go up as much as 0.5 percentage point or even more in most cases. So that's a significant increase in a short period of time. And it's unfortunately, rates don't tend to go down as quickly as they go up. So we might be stuck in this kind of rate environment that we're in right now for a little while until the dust settles on the war in Iran. But we'll see. So in March, we also had a Bank of Canada announcement. Surprise, surprise. They did absolutely nothing, which is actually interesting because of this. We lost 84,000 jobs in February.
That's bad.
That's a lot of jobs in Canada. So the question might be, okay, well, the economy's not doing well. We're not growing in terms of employment. Why wouldn't we cut? Well, the problem is oil prices are pushing inflation up right now, and another cut can push inflation higher. So the Bank of Canada is kind of in this weird push-pull environment where they don't want to see inflation go high because it's back at a level that they're happy with. But on the other side, they could help some people, or they could help a lot of people by cutting interest rates and try to spur some more activity in the economy. It's an interesting situation. Next announcement's April 29th. I honestly don't think they're going to do anything April 29th, but there's more of an argument now to maybe cut rates because of what we just talked about. And if you remember, we've talked about the fact that there could even be rate increases this year. I don't know if that's going to happen right now, but if inflation continues to go up because of oil prices, who knows what's going to happen. So it's a weird situation that we're in because weren't expecting to be in this situation. It's an anomaly in the sense that this war was not something we were predicting, and it's ultimately causing the economy to act or to respond to this. But because of that, we're not really sure where things are going to go. So I think the Bank of Canada is going to hold tight for a little while, but there is arguments to be had about potentially cutting rates. So we'll see what they do, but that's all I got right now for our market update. Any comments on that, Austin, before we dive into more local Fraser Valley stats?
No, I think obviously we're getting into the part of the year, and we've had conversations about this in some of our other episodes where we're starting to see increased activity and people need to move in some situations. All of this stuff just brings more uncertainty to our position, and uncertainty is typically one of those things that stop people from making decisions, which is super interesting. And to recap what Cole said, like you know jobs lost is bad. That, typically when we see this, the Bank of Canada would be saying, okay, well, do we need to cut rates to stimulate the economy, get people, spending more or investing more, let's say, in job creation, things like that. But you offset that again with gas prices going up, which is going to hurt inflation because again, oil is one of the things that gets measured as part of that. Plus, it's also costing people more to do regular things. Like I'm sure you saw there was a news article where, and I wish I had the specifics on this. One of the union leaders, I believe, was saying that there should be more working from home amid
Yes,
some of
the
these price
BC, yeah,
increases.
the BC General Employers Union, BCGEU, actually put out a request to have their employees be able to work from home. I didn't read the entirety of the article. It may have been like not permanently, but full time for the time being, or at least at a larger frequency than they currently are. Because yeah, gas prices have gone up and it costs more money to go to work. And let me guess, Austin, they're not getting paid more to go to work right now. So
I don't believe so. That is sarcasm. Yeah. So obviously, you think about that though, it's costing you more to work, is kind
yeah,
of an interesting, concept, let's say, but, yeah, very, very interesting times, and, more uncertainty, which everybody loves. That is
yeah,
again, sarcasm. Okay, let's hop into the stats headline here. Very interesting March. Let's talk about it. Fraser Valley home prices level off amid improving affordability. So after nearly a year of price declines, the Fraser Valley benchmark prices ticked up month over month for the first time in 11 months. That's good. We've got
it
some
is good.
upward pressure. We've got some sales. While the market still remains firmly in a buyer's market territory, so that doesn't really surprise us with the amount of listings that we are seeing. So again, to kind of paraphrase some of what we're reading in the stats package. 1,007 sales in March, which is a 20% increase from February, but 3% below the same month last year, and then 42% below the 10-year seasonal average. So after decline in February, new listings increased in March, up 20% to 3,341. And this suggests that some sellers are eager to get ahead of the spring market despite sales activity remaining soft and below seasonal levels. So yeah, I mean that is a little bit of upward pressure is good. That's positive. You got a little bit more. I wouldn't say demand, but I mean that's a good sign. I guess I
Yeah.
would say.
Yeah, more activity, right? I mean, a 20% increase in sales month over month is significant. I mean, obviously, you've got to be cognizant of the fact that what the number was that we're starting at to what the number is now, but listings are going to continue to grow. We're seeing that, and if we can see sales pick up a little bit, we can hopefully start to eat away at some of these listings. But it's going to take a little bit more than 1 month, but I still want to look at the positives here. I mean, ultimately, we are seeing some growth in terms of sales, and I don't know, Austin, what are you predicting for April? I mean, it might be a little bit too early to jump the gun on that, but do you see this trend continuing? Where do you see things going?
Yeah, I mean, so from what I personally experienced, January, February were a little bit slower. March, I would say we had a better month. I was able to, put together a couple more sales on my listings, which is good. So those people are now looking for something, which is positive, which is good. So I think because we've had more sales on the listings, those people can now go shopping,
Mhm.
as well as some people that are just first time home buyers getting into the market. So I would not be surprised if, total sales was up a little bit in April from March. That's kind of my predicting. Do I think it's going to be like 1,100 or 1,200 sales? And that'd be nice. I'm not sure if that's necessarily what we're going to end up getting. But yeah, I mean, I would say we're a little bit above that, maybe between 1,000 and 1,100 sales for April, just because, again, you're seeing a little bit more inventory. It sounds awful to say, but I'm going to say it anyway. There's a lot of listings right now, but yeah, you're definitely seeing some stuff that's priced like higher than it should be. Obviously, I joked off the top. I had a conversation. We had written on a property, and we had a difference of opinion of where the market is, let's say, and what improvements cost on a home. A fully renovated unit that was a comparable had sold at a certain price, and these guys were listed above that, and we're like, well, no, that's not going to work. So we wrote what we thought was a fair offer, and they didn't want to look at it, which is fine. That's their right. We can't force them to sell by any means. But I thought we had some pretty compelling data, and along that time is when I was told that this was the bottom. We're really seeing things turn around, and everybody's allowed to have an opinion, I guess, but I'm not sure. I'm not sure if that's the same advice I would be giving people, and I'll maybe leave it at that.
Yeah, I think that's totally a fair thing to say. Let's look at what the numbers mean for buyers and sellers. So we talked about this already. We're in a buyer's market, so sales to active listings ratio is sitting at 11%, which puts us in that buyer's market range. I think also it's fair to say buyers have more choice, which we talk about a lot, more leverage in the sense that they don't have to act as quickly necessarily, depending on the property, and they have the ability to take maybe a little bit more time to look at things, as well as there's different products out there. And then from the seller side of thing, I think you were just kind of hinting at this and maybe even said this, is that sellers need to be sharp about their pricing, and they need to offer a product that people want to buy. So the
Mhm.
presentation has to be something that people are happy to look at, right? Are those all fair to say, you'd say?
Yeah, and I think it's also really mindful too about like the details, right? Like in past markets, you'd see people would get away when inventory was lower or maybe there was less to choose from, where it's like, if you keep your place at like a 7 out of 10 where it's like tidy, but maybe you don't do your paint touch-ups, maybe you don't declutter as much as you should, people would get like you'd still get a bite. We've looked at with one set of clients, we looked at probably 10 or 15 properties at this point. A little bit flexible with the criteria. So we're able to, a lot to choose from in order to help our decision making. And, we looked at one property in particular where you walk in and it was decluttered. They did everything that they should do to showcase the home to its like highest potential. And that doesn't necessarily mean that you're like renovating everything. That just means that it's like, make it look like you care that you live in your home, which sounds like a crazy concept, but it is something that you should be doing in order to showcase your product, right?
Mm.
And take care of the details. And we walked into one in particular, and we're like, wow, this just it feels so different compared to some of the stuff that we looked at. It's like, yeah, it's like it's being presented to us of the fullest potential, and now is the time to spend that or to care about those extra details, and this is when they go the farthest, because when there's so much to choose from, do you want somebody sitting in your living room saying it's like, yeah, it's nice, but it just doesn't, it doesn't feel big enough because it's cluttered, because your furniture's too big, because of, all of these different reasons. So just be very mindful, and hopefully again, you're getting good advice about how to show your home to the fullest potential.
Yeah, I mean, 100%. Like, I think of it as a consumer. If if I want to buy a home and the home looks like something that I want to live in already, it's much easier for me than having to try to picture, okay, if that wasn't there, what would this look like? Or
Mhm.
can I picture what a different layout might look like? Which a layout is one thing, but when there's too much stuff and there's too much clutter, as you said, Austin, it's much harder to envision that for somebody as opposed to when they can actually see it without that stuff and go, wow, I can picture myself living in this exact same setup. And like you said, in this current market, that can be the difference between somebody buying or not buying your place. I think there's a lot to be said about that. Let's jump into prices. Austin already highlighted this in the beginning here, but prices went up, guys. So benchmark price as a whole went up 0.3% month over month. Detached were 0.3, townhouses were also 0.3, and apartments were 0.2. So all in all, pretty good. I mean, we're down year over year, of course, across the board, but I mean, month over month, we've seen some increases. Is there anything you want to touch on here, Austin? Or
Finally, condos are up.
yeah, right.
What a beautiful thing. No, I mean, it's obviously, when I'm looking at some of the trends here, so condos are down the highest. I think that's again just a supply thing. Tons of condos to choose from right now. Detached are down the second most at about 0.5% more than apartments. And then townhomes are they're down as well, but it's almost like 1.5% below what detached are down. And I think again that's because that middle product probably has some more demand. You have people going from a condo to a townhouse. You'll have some people from a detached going down to a townhome as well. So it's kind of that middle product, and you probably have a larger pool of buyers there. So, yeah, I mean that's kind of my thoughts. It's interesting because this is if you recall when we did our predictions episode, this was one of the things that we kind of wondered about when we did our predictions for this year. Like, what happens in the spring market? Obviously, we're going to have more demand. We're going to have more buyers. We're going to have more listings. And one of the things we wondered was, do you get some upward pressure on pricing? And so far we've seen this. I mean, 0.2 to 0.3%. I don't think it's time to, crown us and wear the belts. You know what I mean? But it's a positive sign, let's say. So I'm very curious to see what happens over the next couple months here.
Yeah, for sure. It is a positive sign. It's the thing with data, Austin, is it's very rarely linear. Like you very rarely will see a complete line up or a complete line down. There's going to be bumps along the way. It's when we zoom out, we may look back at March of 2026 and it may be absolutely nothing. It may just be a small little data point, but it also might be the changing point towards prices increasing or we don't know. So the point is we like to look at this month over month, but then as we zoom out, we get a better feel for where information, what the information is telling us is what I should say. We're going to do something a little bit different today. We're going to look at Langley. We're going to do a quick spotlight on Langley here when it comes to stats. So detached sales, Austin, 77 in Langley. So that's down 2.5% year over year, which that's not a big deal, but it's actually up almost 43% from February. So a lot more detached sales in Langley in February. Townhomes were also up from February, so another 16% month over month. And they're actually flat year over year, which I think is interesting there too. And then condos were down about 31% year over year. And actually we're down from February as well. So apartments or condos in Langley saw a decrease. And that's the reason we're doing this spotlight, guys, is because we're giving you general Fraser Valley stats, and now we're looking at a more specific area. And that's just to show you that when you're looking at Fraser Valley, things can be different depending on where you look in the Fraser Valley. So it's good to know if you're looking in Langley, what are the stats that Langley is actually seeing right now? And that's obviously why you talk to Austin, and Austin can tell you those specifics and he can give you the information and help you make sure you're making the offer that's appropriate for the product you're looking for. Do you want to touch on Langley benchmark prices, Austin, a little bit?
Yeah, so detached is still above 1.5 for a benchmark price. Townhomes are just over 800K, so 811,500. Apartments are 556,900, and those are down about 8.4. So, like comparing, I mean, Langley has actually been pretty resilient compared to the rest of the Fraser
Compared to
Valley.
yeah, exactly. Yeah, that's a great point, Austin.
Yeah, so you're almost, like 1% less down.
Yeah, exactly.
In Langley specifically. So, what that tells me is like Langley, it's probably one of the cities in the Fraser Valley that's kind of buoying the rest of the Fraser Valley, at least price wise,
Mhm.
which I think is an interesting stat point.
I think it is too. Let's touch on a couple other areas here, just some other key stats, and then we'll talk about days on market, and we'll just do a quick closing. So, White Rock slash South Surrey detached sales were were strong. So they're up 27% year over year. So that area does have a pretty good amount of detached homes, and is still a very desirable area. So it's not. I wouldn't say it's crazy to think that sales remain strong in those areas. Abbotsford condo sales jumped 44% year over year. This is an interesting one, Austin. I'm going to get you to comment on that one in a second here. And then Surrey combined apartment sales were down actually quite a bit, so about 20% year over year. So I'm curious what your take is on White Rock, South Surrey. I think if you have anything to say about that, but more the condos, especially in Abbotsford. What do you think about that?
Jumping 43.9%. I mean, that's a lot. Is that an anomaly? Maybe. Might just be a price point thing. Like you're probably seeing prices in those areas. Like I was looking at larger condos in, parts of Abbotsford and Langley, for one client, and like the prices are pretty good. Like
Mm,
you're seeing a lot of stuff even in the threes,
right.
and
Wow.
low fours. So I think it could be that maybe just a price point thing where people are saying, well, hey, at that price, it makes sense to get in. Um,
For
so
sure.
that comes to mind. South Surrey, White Rock, always a great place that people want to live. So I think that's interesting. Um, that's kind of all I got on that.
Okay. Yeah, no, it's good. So yeah, a little bit different take this year, excuse me, this month, guys, on stats. We'll quickly cover days on market. So these are actually down month over month. I'm sorry, I don't have the change here, but I can almost certainly say that based on what the numbers I'm seeing here. So detached homes were about 5.5 weeks. Condos were about 6 weeks average days on market, and then townhomes were just a touch over 5 weeks. So reasonable numbers. We've seen these numbers a lot higher. We've seen these numbers be as high as 7+ weeks in some cases. So this is a much more manageable number, I would say, for people in terms of not the expected, but the average amount of time it's taking for different properties to sell. Any take on that, Austin?
So typically that is average days on market.
Yeah, I believe it is
I'm
average.
curious. I'm going to look at the median days.
Yeah, median's a good one. You pull that one up for us.
So median detached is 21 days in the Fraser
Oh,
Valley. That's
nice.
interesting.
That is.
Apartments are 19. That's
Okay.
interesting.
Okay.
Townhomes are 22.
Okay. So those are all about 3 weeks median then.
Yeah.
Around that number. Yeah, so significantly different. And median can be a better indicator or a better stat to look at in some cases when we're looking at days on market.
Yeah. Because you have some of the stuff that obviously gets a bite in a day or two. And then obviously you have the stuff that's been like, a couple hundred days on market or 50 or
Yeah.
75 or 100 days on market. Then it finally gets an offer. And then again, that's a
Mhm.
data point that can kind of average
Skew
things
the
out.
average. Yeah, for sure.
So yeah, that's it. That's interesting. Very interesting. I mean, if you think of stats as like a bell curve, obviously, right? So you're going to have clusters in one end, clusters in the other, and then more in the middle. So I think that's interesting. Uh,
Yep. Just a little stats little stats lesson there for everybody.
yeah,
I like it.
that's all I remember from stats. So just kidding. Okay, closing kind of takeaways. So prices are stabilizing. It's not a hot market, but it does feel like there's a little bit more predictability, and we kind of alluded to that and joked to that earlier in the episode, where it's like, you're still going to have, because of the volume and the recent sales, you're going to have some comparables that you can use. You've got a pretty good idea of when you're referencing the stats, when you're making your offers. It's like, hey, what's happened between this sale? What are the upgrades that are done and everything else, and kind of factor that in of what things cost. Buyers still have some leverage, for sure, but sellers can also win. Like if you're pricing properly,
Mhm.
and you have a really good strategy and you're presenting a good product, you will be what stands out in a market where there's a bunch of stuff to look at. Um, yeah, if you guys have any questions, or want a specific breakdown of any area, of course, Cole and myself are both available, and happy to help you and answer any of your questions. That is our stats episode for this week. Cole, do you have anything to add?
No, I was just going to say, if you guys ask me for specific stats for an area, I'm going to direct you to Austin. So you might as well just go right to Austin because I'm going to ask him anyway.
Yeah, there you go. Perfect. Well, sweet guys. Well, thanks for joining us for another episode. We hope you have an amazing week and take care.
Thanks, guys.